Hey everybody, David Costello here, founder and CEO of Jetpack Workflow and host Growing Your Firm podcast. Today's guest is Jody Grunden. He's a returning guest. In fact, I was joking that we might have to send him a cigar jacket because he's starting to come on the show so much for all you SNL fans. But anyways, having said that, if you don't know Jody, he is the CEO and co-founder of Summit CPA Group. They are a virtual CFO and accounting firm that is now scaled to north of 50 remote employees, and they launched in the early 2000s, very early in distributed work, and they've since grown at a tremendous pace. He's also an official member of the Forbes Finance Council. And in today's interview, because we've had Jody on before, and we've had various Summit team members on before, but today's interview is all about deconstructing how to begin the process of adding CFO services to your firm. And what I like about Jody is that he's in the trenches. So he's still doing this with his firm. And we're going to talk about what he's learned and what he's seen other firms kind of deploy and what works for them. So all that to say, Jody, welcome back to the show.
Yeah, thanks, Dave. Appreciate you being on again.
Yeah, of course. And so, well, let's dive right into it. So, our listeners have asked us about, becoming an advisor, adding value-added services. We see a lot of content around CFO services. Just let's set the stage a little bit.
Sure.
What is the average price for a CFO service? What have you seen clients willing to pay for a CFO service? And then we'll dig into exactly what that entails and the fulfillment, all those good things. But what do you see from a price point?
Sure. So our average price last year was about $68,000 per engagement, and we charge that on a weekly basis. So we don't charge all up front. We don't charge it by the hour. We don't charge it by the month. Everything's done weekly. So we'll take that $68,000, let's say, and it ranges, I say, from probably 30 on the low side to north of 200 on the high side. But we'll take whatever that engagement ends up being, divide that by 52. That's what the engagement is. It's perpetual, meaning that they can quit anytime they want. There's no contract that's binding them for 6 months or a month or a year or anything like that. If they decide, hey, this isn't what we signed up for, just like an employee, they can let us go. And that's kind of how that works. We automatically ACH their bank accounts. We don't send invoices to them. So every Monday, we have a huge pull from all of our clients on Monday, and it just kind of goes from there.
Got it. Wow. Fantastic average contract value, right? For the year. I didn't know this going into it, but there's no commitment to a year or 6 months or 2 years or anything like that.
No, there's no way. Originally, that we were told that's silly, that's dumb, that's people are going to take advantage of you. And the way I looked at it, if we can't perform, then we don't deserve to be a client. We don't deserve to be their CFO. And so no different than an employee arrangement. You can let an employee go the day after you hire them. I wanted that same concept. I wanted that same feeling. I didn't want to be a vendor at all. I wanted to be part of their team, and that's one way that made us part of their team is making it a perpetual engagement. It's an ongoing engagement. It'll last as you want me to last. Typical engagement lasts over 3 years. That's great.
Yeah, well, that was going to be my follow-up question. Is do you have people canceling left and right? And it sounds like no, right? They're with
no,
you
we
for
don't.
3 years. Yeah.
Yeah, because it's a subscription-based model. It's a subscription service-based model. One of our key KPIs is retention rate, and so we want a retention rate north of 90%, and we've been north of 90% for a long time. I think we're at 91% or 92%, and you're never going to have 100% retention rate because that's not the end goal, right? Because your goal is to get that owner of that service-based firm or that company to their end goal, which may be retirement, may be selling to another entity, maybe doing whatever. You're basically getting them to their exit strategy, and unfortunately, when they get to their exit strategy, so do we. And so we've helped them all the way through. We've got them where they are. They're selling to for their retirement or selling to merge their company or whatever. And at that point, we either hang on with the company because they've never had a service like that, or we bow out at that time. So I'd say the majority of the time when people leave us, it's because of an exit strategy similar to that.
Got it. So 30K on the low end, 30K a year on the low end, up to 200K a year. What's the variable? Is it the revenue size of the client?
Yeah, so the way that we charge is we base it on we give all of our clients an a la carte type menu, so they can pick, for instance, if they wanted us to do back office accounting stuff, which about 30% of our clients do, and back office accounting would be like paying their bills and doing receivables and reconciling accounts and stuff like that. That's not the majority we do. About 30%. They can pick any one of those things. They can pick. If they just want us to do accounts payable, they can have us do that. If they want to do just receivables, they can have us do that. They can have us do both. Whatever they want, that we go through that. If they want us to do their taxes, we can do that all the way from their business taxes to individual taxes to sales and property taxes, whatever they want, 1099s, you name it. So we give them that a la carte option. And then the more important thing is we give them the option of, hey, how often do you want this service? Because with our controllership service and our CFO service, the big factor there is that we really dig into forecasting. So forecasting is one of the major levers that we actually offer a client, or KPI we offer a client, because we're really looking forward looking. With our transactional service, which is kind of a typical CPA firm service, that's always looking backward. So we're just doing the financial statements, looking with them, maybe meeting with them once a month and going through that. Controllership service, we're meeting with them probably twice a month, one for revenue rec, and then one for the actual forecasting and financial statement meeting. And then with our CFO package, which is our unlimited package, and I say unlimited at the CFO level, we meet with them weekly. And so we have at least one weekly meeting with the client. It's usually part of their leadership team meeting, where we're actually listening in, hearing the strategy, hearing what's going on in marketing, production, whatever for the larger companies. And for that, we're part of the team there. And then as part of what we do, then we would meet and then go through the forecasting and financials and give more strategic insight to the company, because at that point, we're part of the team. We've heard everything. We know everything. We're not reacting. We're being very, very forward thinking. And so that's more of our virtual CFO, which is more of an unlimited service on the CFO side.
Interesting. And so the cadence which you meet is the standard. You're going to meet with everybody weekly because you're billing, you're charging weekly. Is that the norm for your clients, or is it highly variable?
Yeah, so I would say if we were to take our client base, I would say we have about 10% of our clients are fall in that transactional service. And that's the historical look, meeting once a month. And we still hit their bank account every week, but they meet with us once a month.
Oh, I see.
And with that, that's legacy clients, clients that we took on back in 2002 to 2003, 2004, somewhere way back when. The controllership clients and the CFO clients split pretty equally, leaning more towards the CFO clients, with the rest of our client base. And the CFO clients, although we meet with them on a monthly basis, a fixed meeting once a month, maybe twice a month, depending upon the client, we still hit their bank account every week. So every week we hit their bank account just like we would, an employee. And then the CFO we meet with on a weekly basis. Again, sometimes it's more than one or two times a week, depending upon the situation. Maybe they got something big coming up the pipe and they need to talk to us a little bit more frequently. But we do have those set meetings once a month with set agendas for those meetings. So the time we ACH them, all three services, we all ACH on a weekly basis, never any more frequently or less frequently than that. But the service level really depends. Now keep in mind that even though we set the bar and say, hey, we're meeting with our controllership clients twice a month, or our CFO clients once a week, they have access to us at any time. So they can Slack us, text us, call us, whatever they want, and we're available for them. And I just say that, hey, we just have those set meetings, once or twice a month, or the set meetings, once or twice a week.
Got it. And so when you're sitting down with them on those set meetings from the CFO perspective, what's the agenda look like for a standard meeting there?
Yeah, that's a great question. That's a question we get a lot from CFOs or CPA firms, because they're like, do I need to bring that silver bullet all the time? It scares me at the death just to be in front of these, in front of the client for that much, because I wouldn't know what to say. Well, it's important that you have a set agenda. And what I mean by a set agenda is you have to have a set topic for the meeting. So like, for instance, maybe the first meeting of the month, might be a forecasting meeting. We're going to forecast, we're or if you do the invoicing, maybe it's a rev rec meeting where the first 3 days you're making sure all the hours are in, all the invoices are in for the month. We're done with that. We've got it taken care of. And then maybe the second meeting of the month would be the forecasting meeting. So you pop right into the forecast. How does that revenue affect our forecast? Do we have to make any changes there? And then maybe the third one is the financial statements. So maybe we'll pop into the financial statements and then we go over financial statements. And then maybe the fourth or fifth one, maybe it's a pipeline meeting going through a pipeline, or maybe it could be a variable, of different, agendas for that. But it's important to have those meetings as a set agenda meeting. And the big purpose of that is because you're meeting with maybe different people on the team. It may not just be the owner. It may be the owner and the COO, the operations person. It may be the owner, the marketing person, so each meeting may have a different flavor to it, and maybe not everyone should be involved in that. Maybe that company says, you know what, I don't want my marketing person to know anything about how much anybody on this team makes. And that's important. It's integral to the forecasting meeting, right? Because it's not just revenue rec forecasting or forecasting with the revenue. You're forecasting with the employee costs. How much does every employee cost? You're getting into job costs. And you're getting into a lot in that forecasting meeting that maybe you don't want somebody to have privy to that. So it's important to identify what the topic is going to be in that meeting going into it, and then having a specific agenda that not only you can do, but you can teach somebody in your firm to do, which is even more important. Because like I said, if I could be the CFO for every one of us. We have over 130 clients we meet with on a regular weekly or monthly basis, and I couldn't do it all. There's no way. And so I had to make something replicable so that my next CFO could do it, and then the CFO after that could do it, and then the CFO and so forth. And I had to make it replicable so that the accounting team under them could do that exact same thing, so they could do the work that they're supposed to be doing. And that's where Jetpack has been, a wonder for us, making that a replicable process where, it doesn't, you don't have to relearn the whole thing, or if you do, everything's documented, checklist, everything's in there where they can actually, do it, and bring the new person come in and just kind of hit the ball running there. So again, it's really important to have all that in place. And I kind of went around in circles a little bit there, but the meeting agendas are really important to have specific meeting agendas, stick to them every single month. Make sure you have the right people at the agenda, make sure you have the right people on your team there. We always have one of our, with our CFO, we always have an accountant on the team on the call as well. It's kind of funny, you might think, double billing or whatever you want to call it, because we don't double bill, right? Because we don't bill the client, everything's flat fee, but we have two people there, and it's making that redundancy factor so that the client knows us, knows the team. The client can reach out to different people on the team based on different things. So again, you don't have all that, all the crazy stuff going on where they're contacting you daily. Maybe they'll contact your accountant or whatever, and it just keeps that redundancy factor. So you're actually training that accountant to eventually become you, the CFO.
Yeah. Well, and so how do you begin? By the way, your check's in the mail. Thanks for plugging Jetpack.
Hey, no worries.
The how do you begin that process of maybe you're not used to meeting clients every week or every month, maybe not even every quarter. I don't know, depending on the type of firm that you run. And this is a highly relationship driven service where there's a lot of touch points. And so for folks that may not be used to that level of engagement, what have you seen work well to begin that transition to start getting your mindset into this world, or even trying to introduce some of these services to your clients and getting ready for these touch points?
No, that's great, because accountants typically, we're not outgoing, right? That's what everybody tells us, at least. But anyways, it's important to kind of graduate yourself into it. If I were starting today, when we started in 2004, we didn't do it weekly. I mean, we never even thought about that. That wasn't even really an option. We did tax returns. In 2002, we did tax returns, right? And so we met with the client once a year. What happened was that we got garbage at the end of the year, and then tax season was like, forever. We were working a lot of hours during tax season, and it was like, that's just nonsense. Why do we do that? Why couldn't we actually fix all their issues throughout that year? And and then at tax season, just simply putting together the forms, you're done. And that was the end goal, right? And so in doing that, with our tax return clients, we started deciding, how can we actually take these existing clients and make these into something more rewarding? Because again, it wasn't really rewarding doing a tax return. Seems like most of the time you either got, high fives because they got this big refund. It's like you had anything to do with that, or you got yelled at because they got this big amount due, and again, you had nothing to do with that either, because you weren't meeting with them ever. And so we thought, well, hey, let's be more strategic and meet with these clients on a monthly basis. So we started taking our larger tax return clients and say, you know what, we're going to take that tax return bill, whatever that was, 5, 6, 7, 10,000, whatever that dollar amount was, and we're going to divide this into 12. We're just going to make it a monthly fee, and that's how we started. And then what we're going to do, instead of just doing the tax, we're going to meet with you monthly. And so we met with the clients monthly, and we started really figuring out how to actually talk and communicate. We always talked historical again. We didn't talk about the future stuff. And then eventually it was like, okay, so now we got this historical stuff. This is kind of boring. Now let's figure out how we can actually improve on the situation. And that's when we started adding the forecasting in. And when we did that, it was like, wow, light bulbs going off everywhere. Clients loved it. They loved attending the meetings. It wasn't just a recap of how they did. The clients would always show up at the meetings that they did really well at the end of the month. They'd never show up at the meetings they did bad because they didn't want us telling them they did bad, that type of thing. Where in this case, it was like, off. We missed our mark in November there, December. What is that going to impact January? What's my balance sheet going to look like in February or March? Am I going to have cash? Am I going to need to borrow on that line of credit? I just lost my big client. What's going to happen now? And so we started being able to model for them. And that was huge. And we did that on a monthly basis. And it was like, it just became natural. We're consultants by nature. That's what we do as an accountant. We're consulting the client, teaching them how to actually improve in their business. And so then we step into their shoes, and it's like, oh, here's what I would think you would do. You do this, and this, and make this. If you hired another employee or let somebody go or price by a dime, is that going to impact the bottom line? And all these different modeling things would go into play. And it was like, wow, this is becoming pretty natural. And the clients are like, you know what? We come to you now because of all this great information. We can just ask you questions. We don't have that because we can't afford you on full time. And so can we talk to you more often? And it was like, well, yeah. And then we started talking to them on a weekly basis. So we started gradually going from that monthly cadence where we felt very comfortable. We did it for 6 months, 9 months. I can't remember the exact time frame, but we did it for a certain period of time, felt extremely comfortable. And we knew what kind of message we we're going to get, focusing on that future. And then we started scaling back and say, how else can we improve on this? Well, know what to do. What because we give them all these numbers, but then they wouldn't hit it. So what would happen is we put together a pipeline meeting. And what is a pipeline meeting? Well, we're looking at their pipeline and putting numbers behind it. What's the chance of bids, and through and doing some calculations and figuring out, okay, now our says that we're built for this capacity. We're built to do $300,000 a month, but pipeline showing we only have $120,000. So we had to lower that forecast, lower that expectation. And we started doing that. So we started building that into our model where we're taking their existing sales pipeline and building it into it. Man, bells and whistles are going off even more. It's like, wow, this is really working out well. So then it's like, well, why is this month different than this month? It's like, oh, because they're recognizing their revenue wrong. They're just doing it by the invoice sitting on the wrong days. So then we started going back and say, okay, now we need to make sure that everything is done in the proper, everything's properly done every single month, same way. Revenue is completely by a gap type format there. And we would take all their time information in, compare that to QuickBooks or QBO or whatever accounting software they were using. And we'd make sure that was dialed in. And so when that started being dialed in, our forecast was accurate. And then it was like, well, okay, now how can we step back and how can the client control that? We need to focus on those non-financial KPIs, right? The non-financial stuff that really make that big. And it's not just dollars, because nobody can say, hey, I'm going to increase my sales next year by 10% miraculously up. That never happens, right? And so, but they can control how many trucks they're driving through. Let's say they're a body shop, hey, I want to repair 10 trucks this next month. Next month I've got 15. Next capacity doing a total of 20 every month. So I got this gap month. And then when the month comes, conversations, how many trucks did you get in there? Oh, it looks like you only had, and we thought you're going to have 10 short. Oh, that's why we didn't hit our mark here. That's why net income isn't low, and that's why maybe how it's going to impact going forward on your AR, your everything, how that all impacts everything. Or maybe it's the next month. Hey, yeah, you've got 20 trucks that went through. Congratulations, you only have capacity for 20. So what'd you do? Well, we got 3 that are that had to get pushed to the next month because we're so busy. And that's like, then you get so busy and then so busy. And that's like, well, maybe it's time to build on or make a bigger space to do that as a short term or long term. And so you can kind of see the consulting side just starts kicking in as the scenario changes over time. And that's the key. But to kind of backing into it, you can't just jump in and say that you're going to be a super consultant, because you'll just jump in and you'll fizzle out real quick, because you'll realize that you get in there and you're like, I don't know what I'm going to say. So you kind of have to build that confidence. You got to build the layer, and you've got to have all the cadences in there. You got to have the idea of what you're going to talk about in your meetings, planned out, hey, I'm going to have this type of meeting, this type of meeting, and this type of meeting. And it really depends on the niche you're in, right? So if you're in, like repair shops, like I mentioned, well, maybe you don't have a pipeline niche because you're not working hourly or not doing the, billing, but maybe yours, well, how's my advertising handling, how's my advertising generating, people coming in, or where's my people coming in from? Are they coming in from referrals or other clients or other body shops? Wherever they're coming from, you kind of step into that ownership role and say, hey, if I was running this business, how would I do it? Where would my sources of income be? Where would my faults be? Where is my risk? And from there, it just kind of goes on and on and on. So again, you got to start. The key is you got to start. You can't make excuses. You can't wait till you have the perfect scenario. You got to jump in there. You've got existing clients you can actually start working with. If you've got any kind of tax practice at all, just grab the big ones, upsell them a little bit if you want to, but you've got to get started, and that's the key. Once you get started, you'll figure it out. You're a consultant by nature. You're going to figure it out, and it will actually, it'll evolve into a really super nice practice, as long as you do everything like I just outlined.
Yeah, and what I really like about that process is how evolutionary it is. It's not, you can add value by showing up, reviewing the historicals, yes, but even starting to help them build out some forecasting. I do have a question about time management before I get
Sure.
there. For folks that are, you said, taking their largest, tax clients, doing a little bit of an upsell. It's very tactical, but what would you charge as an upsell, like 20% more, 50% more, 100% more, as an upsell to start the journey of building this muscle of becoming consultative and how meeting monthly? What do you typically see as folks that are starting to dip their toes in the water? Because I think many would probably be like, I just want to do it for free, but then I'm not valuing my time. So then how do I start
Yeah.
a little upsell?
Yeah, that's a tough one, right? Because when we started off, I'd love to say that we said, hey, we took a $10,000 client to a $60,000 client overnight, and they decided to make that move. That's really probably unrealistic, because you've had that relationship with them so much. So I would do the upsell on whatever you feel comfortable with. And I'm being completely honest with you, with our first clients that we did this, back in 2004, we haven't increased their price hardly at all since 2004. And that was a thank you for helping us get started. I have no intention of increasing the price, not because I don't have the guts to do a price increase for them. It's just, thank you very much. Let's get started. And that's how we did it. That was kind of like, and they knew it. We were telling them, hey, this is a great thing. We're can you add this extra amount of, I can't remember the exact, you add this amount of dollars to it, or in some cases charge them anything at all. Like you said, we kind of just went the free mark just to see if we can figure it out. So it really depends on what you're the most comfortable with. Now, I know some CPAs over in Ohio that I met that they would just like fall off their chair if they said I wouldn't charge them. They would go ahead and introduce them. Hey, here's what the fee is. If you want us to go from here to here, here's what the fee is. And that's fine too. And that's what we do today. So if those clients, of yesteryear, that we picked up a long time ago, say, hey, we want to get, we heard a lot about your virtual CFO. You've been doing it forever. It's time to take that leap. We're going to take them from a $15,000 tax return or a $10,000 tax return, and then we're going to bump them right up to wherever we're at now, charging now, which could be 60 or 70 or whatever it is. And, they see the benefit right away. And we're actually just doing that with the client right now, a doctor that has been with us forever. We charge a very minimal tax return fee, met with her on a quarterly basis. I think it's our only quarterly based client we have in the entire firm. And she's like, hey, I think I'm ready to jump up. We've added another doctor. I need some consulting help. And we're going to move her from, and I'm saying maybe a $4,000 or $5,000 a year tax return client to a $65,000 virtual CFO client. Just because that's just how we're doing it now. But again, it's kind of tough at the beginning because a little shell shock, maybe a little shell shock with the dollar amounts. But I think you just got to do it whatever you feel comfortable, knowing that this is not if you go low, know for sure that this is not the permanent way of doing it. This is only the temporary doing it, just to get your feet wet. If you're charging, what you're worth, and the idea is that make this profitable. And it took us a long time to figure that out. And it's kind of funny, we're accountants, right? So we should be able to figure that out right away. But it's one of those deals you have to be profitable, because we always undervalue provided, and we always over service our clients. And that was a really big issue at the very beginning. So, with that, what I would do is whenever you build your model out, here's where I'm going to start today with these 3 clients or 4 clients to figure it out. Or you just jump in and say, hey, here's my model. I'm going to convert these clients to it. That's fine too. It depends on your relationship. But you want to maintain about a 75% gross profit with each of your clients. So that's an individual gross profit per client. That's not your overall gross profit of your company, but that's an individual 75%. And if you can do that and maintain that on a global basis, you're going to be extremely profitable. Your practice will be very profitable. Ours is, right there. It's we have at least a 50% gross profit, and we have at least a 25% net after owner's comp. And so we've grown it to almost an $8 million, $9 million firm this year, with a really nice bottom line, just by building up this virtual CFO platform, making sure that our clients are profitable, that we're serving profitable clients, and that we're also making a very nice profit in the process.
I love it. Well, final question, because we've covered a lot of ground, but I imagine, folks should be listening and they say, wow, this is amazing, light bulb moments, but they're thinking, great, how do I find the time to do this? Right? We're a million things going on. PPP round 1, round 2, maybe it'll be round 3, 4, 5, 6, 7. I don't know by the time people are listening to this. And so how do you start approaching developing the space and prioritizing potentially launching the service?
Yeah, that's the key, right? Because we're all really busy. We have, not only a busy practice, but we also have a busy personal life. And maybe if you have kids, you've got travel, sports, and all that kind of stuff. How do I make that happen? Well, you just have to. You just have to actually just buck it up and do it. The funny thing is that you have to start prioritizing certain things. And so if your thing is, hey, I want to prioritize getting this off and rolling, then maybe you buy some books, you read up on it, you give us a call, you figure out how you want to actually make this work. And so you do your homework. And so once you start doing your homework, then you start adding on to it, and you start pulling yourself and making yourself not the primary the primary person on this. Because like when I started off, if I knew I was actually the person, because it was originally me, and I brought Adam on, my partner, right away. And he was I didn't have any revenue, I didn't have any clients. We started working through it, and I knew that if I worked on all the clients myself, and if I was the person that was selling, then we wouldn't be profitable, because it would just be the Jody show, and people would come to see the Jody show, and they would want to consult only with Jody. And that's the wrong way of doing it. You've got to promote it as, hey, this is what Summit CPA does. We're virtual CFOs. I'm selling it as in Summit CPA, and then I'm training other people within the firm to champion it, and then I oversee it, and then it just continues to snowball in that regard, where I actually start pulling myself out of client-facing work. And you have to do it gradually, but you take off the different hats, and you find other people to do those hats. And when they do it well, great, then you kind of move away to the next hat, to where, like for instance, myself, I have maybe 3 or 4 clients I meet with on a monthly basis. I have about 6 hours of billable work a month, and that's it. The rest of the stuff I'm working on the business, making sure that, the processes are working fine, making sure we have the right tools, always evaluating tools and processes, and then always making sure we have the right people and we're treating them well, not burning them out, making sure that they just love to come and work for Summit CPA Group and be part of a really cool team. And that's my job right now. I'm the CEO, and that's what I'm doing, and that's why I promote the company and so forth. And so you have to kind of gradually move yourself out of that, and you got to force it, and unfortunately that might mean working a little extra time during the off season to build this, to get it off your plate. But you're going to spend, when I tell people, when you delegate, abdicate it, don't just give it to somebody and walk away, but actually put it so that you can actually review it. And again, a jetpack plug, you keep everything in a system and a process, it works out perfect. But you want to make sure that, and again, I tell people all the time that you have to spend a little extra time up front to save a ton of time down the road. And that's the key to really adding any type of service, or really improving your lifestyle. Because again, with our team, team, our team averages about 40 hours a week throughout the whole year. Our CFOs work maybe 45, 50 hours a week on average. They make a ton of money doing it, of course. And, the work-life balance is there. We accomplished our original goal of not killing ourselves during busy season. We only have like 3 or 4 tax people, and they don't spend more than 40 hours a week during busy season. So it's kind of a nice thing. So we turn that traditional partnership life, the partnership accounting firm life, into that corporate life, just by learning how to delegate and not abdicate, but learning how to, again, delegate, and then really taking ourselves out of the day-to-day work and pushing on to other people.
Yeah, I love that. I love that. And I know in the past, you presented at our summit. You've been talking about virtual CFO services, and something that came on our radar, I think it was a couple months ago, maybe it was last quarter, that you've now taken on the role of mentoring firms that actually want to start approaching the service. So for folks that are maybe interested in connecting with you or other team members at Summit, maybe they want to explore some of the things that you've done to build a path for fellow firms to maybe approach this type of service. What's the best way for them to connect with you or start learning more about what you have going on?
Yeah, so that was kind of something we put together. We after talking all these different seminars and really being in front of a lot of people, was asking, hey, could you help us out or can you consult us and that sort of thing. And at first we just kind of pushed it off, and then we thought, let's open our company up, let's be vulnerable, and let's teach everybody how we do everything, from how we do sales and marketing to how we do processes, to tools, to really everything we do, how to hire the right people. And we developed a 15 module course. And that 15 module course was originally for our team, because we wanted to show our team how we did things. Because as we're bringing on these people, we're growing at 8 people a year, and it's like, well, you teach these people this year, and you forget you got 8 more people. Lose 1 or 2, and now you've got 10 new people. It's like, well, I forgot, I never taught them how to, they don't know how to spell Summit. I taught the group before that how to spell Summit, and with that we thought, well, let's build this training course that basically that is ever living, that's a module type course, and really teach our team how to be Summit CPA Group. And then we thought, well, let's add this and let's open this to the public and really make it something that if any CPA firm out there wants to figure out how to be or how to deliver services like this, to do it in a distributed world, that we've been virtual since 2013, way before COVID. We were one of the first 150 companies in the world to be distributed, which is kind of cool. And so we kind of figured it out. It took us a little bit to figure it out. We kind of figured that out. But then to deliver services like this is great, because we can have, services, when you think about it, we can deliver the same service with 5 people in all different states, giving to clients that may be also distributed in 5 different states. It could be like 10 different states. We're all communicating through, a Zoom conference or something like that, and delivering it. And we kind of go into that and teach people how to actually do that. The website, do you have the website, the website
Yeah.
URL there?
We actually have a special link here. So if somebody's listening and they want to explore this service, and there's free downloadables here as well. Looks like there's a free guide on the virtual CFO playbook. But if anything resonated with you today, the link here is summitcpa.net/VCFO-playbook-jetpack. Right. So if you want to say thank you to the Growing Your Firm podcast and this type of interview, go check out the page, download the free book. Like I don't think you really lose anything by downloading a free guide, exploring this, checking out, see if it makes sense for your firm. And if you're driving around, you couldn't jot down all the notes from today. I mean, we covered a lot, right? We talked about the meeting, the agenda, we talked about margins, we talked about pricing. We gave the link. Everything will be linked up at jetpackworkflow.com/blog. That's jetpackworkflow.com/blog. We're going to link everything up. We'll do a full recap of today's episode. And Jody, as always, this has been a blast, and I appreciate you coming on today.
Yeah, thanks, Dave. Like always, it's been a great time. Appreciate it.
Yeah, final thing I'll say is, hey, if you enjoyed this interview, if you like what Jody was saying, share it with a fellow firm owner that might be exploring these concepts. And if you really love this interview, go ahead and leave a review as well. And again, we'll drop everything in the Jetpack Workflow blog if you want to check out more resources from Jody and his team. Thanks again.